And joining us now, pleased to have on with us, Jay Debberton, President and CEO of CHS Incorporated. Jay, always a pleasure. Happy New Year to you, sir. I hope you're doing well.
Happy New Year to you, Jesse, on a fine winter day.
Yes, definitely a fine winter day to talk about the quarter one earnings for CHS and, looking at strong global demand once again here, Jay. And overall, looks like first quarter earnings for CHS looking pretty robust. Let's dive in and give us some of the headline takeaways you have with the first quarter earnings report, Jay.
Sure, Jesse. So we are reporting record earnings for the company for our first quarter results at about $783 million for just the quarter. Revenues of just under $13 billion. Revenues up about 17% quarter on quarter. And as we look across CHS, Jesse, good balance across the portfolio in terms of where the earnings came from. Energy was in at about $400 million of earnings. Really strong quarter for energy. Just continues to rebound well from COVID and other issues around the world, and nice returns there. And in our ag platform, which is where our processing, our grain handling business, our retail operations, and agronomy operations lay, about $287 million worth of earnings within that platform. So really good movement in terms of demand across the world frankly for the ag commodities that our owners produce, and really nice to see that strong global demand. In our nitrogen production segment, we had earnings about $97 million. That's our joint venture we have with CF Industries, where we actually have a manufacturing joint venture with CF Industries around nitrogen. And as you know, and as your listeners know, high fertilizer prices and they are translating into high earnings off that segment. The benefit of doing business with CHS and a cooperative is when that segment makes good money and you buy from CHS, you get to participate in that. So happy to see that. And then finally, in our subsidiaries, nice continued strength within that performance as well. So bringing that all together, about $780 million worth of earnings just for the quarter.
Well, Jay, you mentioned the energy side, and it seemed like significant improvements on that energy segment, and you alluded to global demand and strong demand here as well in the in rural America. I mean, just looking at this energy sector as a whole, what stands out to you as to why we saw a big improvement and a big rebound here in this first quarter?
Well, a couple things I point to, Jesse. When COVID really came in, we did see some manufacturers, refiners close down or change their operations away from just the gasoline and diesel fuel that they produced, and that's crimping up supply just a bit. And then demands just kind of came back strong here in the U.S. And it doesn't take a whole lot to snug things back up when we were frankly so long during the time of COVID, when people just didn't drive, and demands globally as well as in the United States were just soft. In addition, we are a big buyer of Canadian crude oil. We only buy Canadian crude oil and U.S. produced crude oil for our refineries, and some of the trading opportunities within the Canadian crude oil provided earnings for us that we were able to enjoy as well.
Well, also, you mentioned the fertilizer side, the nitrogen production with CF Nitrogen, CF Industries. I think about how fertilizer prices have ebbed and flowed a little bit. We've come off those highs recently, but still strong demand. And just thinking about as farmers get ready to plant here this spring in the U.S., the high input costs, those high fertilizer costs, they're still out there. What's your thoughts a little bit more in this fertilizer sector as we look ahead here and move out of quarter one, shift into quarter two?
Well, I'll start at the offset, Jesse. I'm not going to go out on a limb to say what future prices are going to be, because frankly, there's just so many dynamics going on around the world. It's very, very difficult to kind of forecast what they would they would be. I guess what we're saying to producers is we have the fertilizer today. We will have it in the spring, but we know our pricing and so forth today. There's just a lot of variables between now and when people hit the fields that they could go a number of different ways. And that's everything from river conditions and high water or not. Global supply of fertilizer, particularly in parts of the world where natural gas prices are so significantly higher than they are here in the U.S. And do they produce as much? And all those types of variables really create questions, I think, going forward in terms of what do we think pricing is going to be. And so people are, frankly, I think, playing it a little closer to the vest. They're taking product in, I think, more continually. Just knowing, okay, I know what the circumstances are today. I can see what the forward prices are, and I can make some marketing decisions as well as some cost of input decisions.
Jay, some other news I want to touch on with you as well. I know CHS announcing their expansion of a joint venture, Temco LLC, and adding in a Cargill-owned export grain terminal in Houston, Texas. Talk a little bit about this and some of the expansion of Temco here a little bit. Can you give us some background on it, Jay?
Yeah, I sure can. We have a long-standing joint venture with Cargill. They've been for more than a decade, just a really strong partner with CHS, and we do really well together. I think a lot of the team over at Cargill. Essentially, Jesse, you think about export avenues out of the United States for grain. The Pacific Northwest is a large one. The New Orleans area is a large one. And so is what we call the Center Gulf in the Houston area is a large one. At CHS, we had strong export capabilities in the Pacific Northwest and in the New Orleans area. And this venture, this expanded venture with Cargill and Temco, really allows that Center Gulf export avenue to be opened up wider with CHS. So the benefit, that's kind of the strategic reason for it. The benefit for the people that own us is for those grain customers of CHS whose grain is really targeted for that part of the export corridor. Now we have that door and we have that capability to help them do it. So it's good for the Temco venture because it's more volume through an asset, and it's good for our owners in that we have now that dedicated facility that can export for the grain that is aimed at that export avenue.
Well, Jay, I think overall, whether we're talking the income generated or talking joint ventures that CHS has, everything under the umbrella, that all comes back to that cooperative model you guys have. I think farmer owners, cooperative members just got to be happy with everything they're seeing and hearing right now from CHS.
We're working hard at it. We're working hard at providing value for the people that own us and providing food for customers around the world, and that's what we're about. That's absolutely what we're about, and we work hard at that. It's not an easy business, but we work hard at it, and we're just honored to have our part of helping people eat around the world.
Well, I know folks can see the first quarter earnings and more on the Temco announcement on AmericanAgNetwork.com. With that, Jay Debberton, President, CEO, CHS, always a pleasure, sir. Thanks for joining us today. We'll talk to you again real soon.
Thanks, Jesse, and have a good weekend.